Welcome to the GrowCast Show, and today is episode 95. And we are joined by senior financial consultant Amos Goh, a trusted expert in insurance and investment. Let's dive in. All right, Amos, where do I start with investing if I'm new?
Right. Thanks, Rayson, for this opportunity as well. So probably just to get started, I would say that start by building your emergency funds, and then learn the basics of investing and also diversification. Then start small with investing in a simple world index fund or ETF, and then be consistent. Lastly, I would say that a financial coach can help you set up a clear and confident strategy.
Right, and I would like to ask you, should I prioritize investing more aggressively since I have fewer or no dependents?
Potentially, yes, because you have fewer responsibilities and obligations, so you may be able to take on more risks. However, that does not mean that you are being reckless. It just means that you have more time on your side and you are able to ride out the volatility and stay invested for the longer term.
Oh, nice. Okay,
Yeah.
and should I invest monthly or wait to invest when I have larger sums?
So oftentimes people, when they see an opportunity and they wait for the perfect time, right, it often leads to delays. So I would say that start small, start now, and then increase as you go.
Amos, markets are all-time high now, right? So should I hold back and wait for the market to dip?
I think it's time in the market is more important than timing the market, right? So it would be best that the individual will be able to start as soon as possible and stay invested. So actually, when that happens, you yield a greater result than waiting at the sidelines.
Okay, understand. And should I invest in ETFs, REITs, property, crypto, or all of them?
All has its place in an individual's investment portfolio, but at the end of the day, diversification matters, and it is down to your risk profile and your goals. So a mixture of like core investments, for example, like equities, your fixed income. Then you can have the alternatives like your REITs, your properties, and even crypto, right? But that should make up a small portion of it, and then see how it aligns to your risk profile and goals.
What's the opportunity cost of not investing while I enjoy my life now?
I think many times people think that they can choose to wait at the sidelines and delay, but the cost is actually ranging from tens or even hundreds of thousands of dollars. So actually waiting costs you more than you actually think it would. I have an example. Two investors. One, investor A invests 10 years early and continuously, but stop 10 years later. And then that's when investor B comes in and start investing, which is 10 years later. And they all stay invested in market for the next 30 years. Whose portfolio grew the most?
B.
You would think B, right?
Yeah.
But math tells us that actually investor A, and the results of my clients tells me that investor A, in fact, portfolio is even more than investor B.
I thought A stopped after 10 years while the other one just continued 10 years later and again keep investing.
Yeah. So logically, we think investor B will be able to catch up, right?
Yeah.
But that is the magic and the power of being in market and the power of compounding effect.
Right.
Yeah. So that's why when people have not invested, I always tell them, don't wait. The best time to invest is 10 years ago or 20 years ago. Yeah.
I'm overwhelmed by the options out there. So where should I start?
I like to see things as a whole, because how I plan holistically for my clients. So again, going back to the fundamentals is to set up emergency funds, right? Probably, ideally, maybe you can start minimum of 6 months of emergency funds. Thereafter, that's when you want to settle your insurance coverage, meaning to say, get sufficient coverage that you need.
Okay.
All right. You start investing into a low cost world ETF or fund.
Okay.
Yeah. And then stay consistent in that way. Yeah.
Right. And Amos, is it better to do it ourselves or work with a financial advisor?
Okay. I get this question a lot, and I have clients that have done it themselves before. And so now, after some time, they usually would engage me fully The reason is because DIY investing, right, or doing it yourself requires you to have a lot of knowledge. And usually these individuals are very knowledgeable and also very disciplined. So where an advisor comes in, right, he adds value into the client, right, which is to provide them clarity and accountability, and as well they will help the client to avoid emotional mistakes in their financial journey.
Right.
Lastly is that it helps to integrate all aspects of the client's financial life. So that's what a advisor can add value. You know what? You'll be surprised that many of my clients are busy professionals, like doctors and lawyers. And even more shocking are actually bankers and financial controllers. They also benefit from the guidance of a financial advisor.
What types of investments are best for busy people who can't and don't want to monitor the markets regularly, like your doctors and lawyers and even bankers?
Yeah. So what I will always encourage clients of such profile would be to work with a trusted financial advisor first, right? For the advisor to really understand, have a comprehensive understanding and holistic analysis of all your resources, and then after that, help you craft a strategy that is generally, I would say, right, broad-based, globally diversified, and with such a portfolio, right, it will and of course to still suit to your financial goals. And once that is set up, this portfolio can be work in the background while the financial advisor continue to help you integrate and plan holistically for all the other aspects and ensure that you reach your goals. And you can continue to focus on your career and focus on what matters to you.
Should I take profit when the market is up or hold long term?
Okay, if your goal has changed or even your risk tolerance has changed, taking profit can make sense. But remember, cashing out will mean that you stop your money from being in the market, and that would mean that you prevent your monies or your gains from growing on top of itself. And you need to weigh the choice carefully, whether are you trading off long-term growth for short-term relief.
And I would like to ask you, how do I diversify my investments for safety and growth?
Interestingly, the strategy that I help for many of my clients is that to invest in the total stock market, right? Which means you are globally diversified and you have a reasonable time in the market, right? With these two, diversification and time in the market, it actually reduces risk and also smoothen the returns of your portfolio. So that is one way you can do it. So
how do we know whether am I too conservative or too aggressive with my investments?
It really depends. It depends on what's the goal that you're trying to achieve. And so then with that, knowing your goal, and then we assess it by three things. I call it the one framework, right? Which is your willingness to take risks, your ability to take risks, and your the need to take risks. And then we will then be able to identify whether you are too conservative or too aggressive. Yeah.
Can't I just use a Robo advisor instead?
Yeah, I think these days with technology, right? I think, and with the convenience, Robo investing is good, right? It's good for the basic investing and automation that it brings to a client. However, what it does not provide is the human side of things and the coaching part of things, which is they are unable to help you to align or even clarify your values and your goals when it comes to investing, and also coach you in terms of when markets are ups and downs and avoid those emotional mistakes that we talked about earlier. Robo investing can't do. And last but not least is to also help you integrate this investment strategy in your overall financial portfolio.
Is it too late to invest with markets at all-time highs?
It's a common worry that my clients have. However, more often than not, when we look back, right, these highs in the past become a stepping stone for the next growth for my clients' portfolio.
Right.
So what I would advise is for clients to not wait at the sidelines, but to continue invest into the market. I think more importantly is investing in the right portfolio, which is for me is the market and not just any particular stock or specific stock that you have that you are passionate about.
Should I be investing in Bitcoin or just stay in cash?
I think there is a space for cryptocurrency. At the end of the day, it depends on your risk profile, right? Your risk ability and also your goals. I mean, if you ask me that question 10 years ago, probably my advice is against it or I discourage it. But now things have kind of like stabilized and even like the big boys have gone into investing, into cryptocurrencies. So I see that there is space that in my client's portfolio, but a small fraction of it catered for that. Yep. At the end of the day, it depends on whether the person is able to accept the volatility that is with cryptocurrency and also his goals that they are trying to achieve.
Should I get an endowment plan or invest for my child's university fund?
Okay. So endowment plans were a very good financial instruments in the past. There was an absence of easy to invest portfolios, right? So then that was a good in past. But what it does provide is stability and also some form of guarantee for endowment plans. But I wouldn't say I would choose one over the other. I would always recommend my clients to have both, have a blend of both, so that you have a mixture of high growth that comes from investing, right? Though it comes with the ups and downs, but at the same time, coupling it with a endowment plan will give them that assurance and that a portion of it being guaranteed.
Why did you choose this profession?
I chose this industry because once I was on the receiving end of, I would say, purely product-driven sales, that journey was confusing and a costly one, right? So it's a poorly aligned decision that happened, right? And because of my own personal journey, that I had to avoid these pitfalls. There were no holistic financial guidance at that point of time. That's when I decided I've experienced this. I do not want another person to experience this. I want them to be able to have access to holistic financial planning. And that's why I decided to, make it my mission to help people in terms of giving them the holistic financial advice and to help them navigate their financial journey to reach their goals and, so that they can live the life that they envision today and not just for the future.
Amos, I already have insurance and savings, right? So what else do I need?
Okay. This is always a very standard comment or feedback that I get from my clients, right? They think that it's just that. But actually, insurance and savings, they are just I would say, they are tools and just the basic. What you need is actually a strategy and that aligns with all these things, right? A plan that help you reach your goals to ensure that your monies or your resources grow faster than inflation, right? And as well that everything is aligned, that you have the sufficient protection needed, and as well whether you're on track to your goals, things like that. So you need a advisor to come in to help you, give you a clear and robust strategy to help you achieve your goals.
What is the difference between a financial advisor, a banker, and insurance agent?
So I would say that a banker and a insurance agent is someone like you today go into a gym shop, right? You want to buy the gym equipment and that salesperson will recommend you the gym equipment, for whatever reason. But as long as you need it, they'll sell you their best equipment. Whereas a financial advisor is a fitness coach. They are not there to sell you a product. More than choosing a product for you to do your exercise, they're helping you to come up with a strategy that aligns with your goals, that aligns with where you are right now, and then help you get to your financial goal. In other words, I can say that a financial advisor is like an architect, right? We design a very robust strategy and plan for our clients.
Right, understand. So what about a banker then?
Banker, they will, just like you go to a gym shop, right? If you want to train your biceps, then they'll sell you the bicep curl machine, right? So that's what they'll do. Whatever that's available to meet that need or whatever that is available in the shop, they will definitely pitch it for your need or for your wants.
Right, so you're saying that a banker and an insurance agent are similar? whereas financial advisor is more holistically helping you in a sense, like a coach.
Yes.
Understand? Okay. And I would like to ask you, what does it really mean to be a holistic financial advisor today?
It will mean that having a very meaningful conversation with my clients, right? It will mean that we want to understand what's important to you, and also what you value most and what are your goals, right? And we want to also then have a very holistic understanding of your current resources, and let's see how we can get you there confidently, stress-free. That's what I would say a holistic financial advisor would do.
What exactly happens in a first meeting with you? And do I need to bring anything?
Okay, great. So often it looks like this. So picture with me, right?
Okay.
We are sitting down in a nice cafe, right? And we're having a very meaningful conversation over coffee.
Right.
Yeah. So that's really how it looks like. And then that's where I would like my clients to share with me what is important, what is their values, and then understand where they are right now. For example, what their how's their income like right now, what their assets, what are their liabilities, and then understand their goals better as well. And after that, of course, you want to also bring along your statements or even policies which you like me to review. Last but not least is to be open-minded. I think there's no pressure, no obligation for the first meeting. And at the end of the day, if it feels right, then that's when we can establish a long-term relationship.
Nice. Okay. And Amos, you look young. How experienced are you really?
I get that a lot. I'm not sure, have you seen the meme of that's floating around whereby they are looking for 10 years experience, fresh grad. And then the picture is a bunch of preschoolers wearing a construction hat.
Yep.
Yeah, so I'm one of them.
Okay.
No, jokes aside, I've been in the industry for close to a decade.
Wow.
But because of my youthful look, I do get this comment a lot. I used to see this as a disadvantage until some of my clients tell me that, you know what, actually with you being youthful, you have the energy, and you are able to be with me for the long term, for the long haul.
Right.
And that's where I see as a strength, and no longer see it as a weakness.
How much insurance protection is enough? Or is it never enough?
I think there is definitely, I would say, a time that is enough, right? Because it cannot be never ending protection. I think it's to find the right amount of protection that we need in life. So what is the right amount? The right amount would be one that that can help our families to maintain the same lifestyle. If anything happens to, for example, myself or the sole breadwinner of the family, right? And that will also mean that the major debts will be covered, and that money is able to continue to provide the same lifestyle for your family members. That is what I would say is enough. So going down practically is to look at, covering your income, your active income, funeral expenses, your major debts, and then also if you have any financial dependents, especially kids, right? Then there are children's education, you would like it to be covered as well.
How much life insurance do I need at this stage of life right now?
I would like to keep it even simpler, right? Is to consider your life right now, and based on today's value, how much would you need to provide, right, for your family to maintain that same lifestyle? Is it a $5,000 a month? And for how long would you need to provide that for? And then you consider, like I earlier mentioned, funeral costs, major debts, to be considered. Yeah, so that it will be the right amount that you need. Of course, if today you are single or you are dual income without kids, right? Then that's when you maybe can have lesser coverage, but having some coverage will be wise as well.
Isn't insurance only for the wealthy? Isn't it a waste of money?
Actually, it's the opposite. If you don't have large savings, insurance is even more important, right? If there is a financial shock, insurance can prevent us from going into a financial crisis. For the wealthy, paying out of their own pocket is an option. That's why I would say that insurance is even more critical and essential for those that have limited resources.
Do I really need critical illness insurance at my age?
Unfortunately, life happens, right? Serious illness can happen at any age. And with a critical illness cover, what it essentially does, it provides the individual a lump sum of money for them to to cover their income, or even provide them an alternative treatment option, and cover any form of life cost that impacts them in their life.
Isn't hospitalization coverage and critical illness coverage the same thing?
Interestingly, I have no idea why, but it's a common misconception.
Right.
People think that they are the same thing.
Okay.
But as the name implies, a hospitalization cover provides coverage and pays out or covers the hospitalization expense if one is hospitalized.
Right.
Right.
Okay.
And whereas a critical illness cover pays out a lump sum of money to the individual, and they
Right.
can use that money for whatever purpose they want, be it whether it's to cover the remaining hospital bill expenses, or cover the cost of an alternative treatment, or even supplement the loss of their income. I would say that you need both, and then that will give you a comprehensive cover in a time of medical crisis.
With healthcare costs going up, do we need to plan differently for medical expenses today?
In the past, probably 5 years or 10 years ago, we can really just get the cover. For example, a hospital plan, that is being provided by 7 providers right now in the market, and not think about it anymore. But there have been a lot of talks right now, right, especially in the recent times, that medical costs and even private insurance premiums are increasing. So I feel that there needs to be more attention placed on this aspect of medical cover or medical expenses in our overall financial portfolio.
How often should I review my insurance coverage?
I think that's the simplest question of the day today.
Okay.
Annually, or whenever there's a life stage change, that's when you want to review your policies or your
Understand.
portfolio.
What happens to my assets if I pass away without a will?
It will be passed on to our loved ones through the intestate law. So of course, it may not be according to our wishes. So that's where writing a will is important. Again, going back, without a will, what it means is there will be, your loved ones will experience delays, and even in terms of the operation of things, or legal side of things, monetary side of things, that they need to, all these hurdles that need to jump, right?
Right.
So with a will, then all this will be reduced substantially, and most importantly, your assets or your estate in this case goes to the right person in a timely manner.
This is financial planning only for high net worth individuals and families?
There's a common misconception regards to this, and it cannot be further from the truth. Financial planning is for everyone. Each and every one of us have our dreams and our goals that we want to achieve, and even responsibilities that we are carrying, right? So financial planning helps everyone, right? It's needed. Everyone needs financial planning. Whether you're starting out, whether you're building your wealth, or whether you are retiring, you need a retirement plan. At the end of the day, all this, whichever juncture, you will need a clear plan, right, to help you see what you have and to help you achieve where you want to go. And that's what financial planning does.
Thank you so much for all your wisdom and golden nuggets that you've dropped over here in the podcast. And guys, that's it for today's episode with senior financial consultant Amos Goh, and hope you have gained some fresh perspectives on investing and insurance to help you make smarter financial choices. Thanks for listening, and until next time, stay informed and stay empowered.